Good afternoon, folks. What's up, everybody? Hey, hey. What's up, Bill? What's up, Christian, Dave, Joanna, Laith, Bandit, Linkov? Good afternoon. Good to see you guys. Should be up on YouTube, up in the VTF. It is 11 after 4 on Wednesday, January 3rd. It is Wednesday, right? I've been all confused all week with the Monday being off. What's up, KP? What's up, Ralph? So let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the same as it was yesterday. Should be no differences there. I day traded TNA, made a couple bucks in it, but got into and out of it. Nothing else new. Got a little bit heavier in some of the positions that I had just entered, very small yesterday. I added to pretty much all of them today. I added to Unity and Snap and Chewy and BYON and S. I added all, but I wouldn't say I'm super heavy in anything yet. Kind of just following the game plan of starting by building in small and then potentially looking for a signal to be able to get some size. And that signal hasn't really been able to manifest itself. We're looking at some key levels for the market in the morning meeting today to see if we could get above them, hold above them, stay above them. And for the most part, we failed on those levels. Was looking a little bit at SPY 470 during the intraday today, and QQQ 400 during the day today, and IWM 196 during the day. Were kind of the bigger levels to pay attention to. We lost all of them throughout the day. Lost all of them on the closing basis. There was certainly a little bit of a battle post 2 p.m. with the Fed minutes when it looked like maybe this market was picking up and the Qs were getting back above 400 and the SPYs were getting back above 470. The IWM was certainly a dog, especially into the close, just really selling off. But for the most part, was trying to battle that key 196 this morning until it eventually lost that into the close as well, and then was rapidly trading into this gap once we actually kind of broke new lows post 2 p.m. today, post the Fed minutes. And then that's exactly what we talked about in the morning meeting was, let's look at this 196. It's a big support zone. Let's see if we can hold there. It's in the equilibrium area, but if you lose 196, be careful because you got a big gap here that fills down at 193.60 or so. So it could be a real fast move from 196 down to that 193.60 for the gap fill. And that's pretty much what happened. It happened all into the close. The low of the day today is 193.78. So almost perfectly filled the gap. And that was after battling 196 all day. We caught that uptick across the board in the market at like 245 when we were still trying to digest the Fed minutes. And then the IWM, which was heaviest all day, just totally failed. You can see this very rapid sell-off into the gap, almost filling the gap. Going back over to the daily charts, we can look at all three indices. It's a day 3 down today, and we closed kind of weak. I don't think that this should be a surprise, right? We're coming off a massive rally. Markets, when they uptrend, tend to work in patterns of higher highs and higher lows. That's really not what the market gave us in November and December. It wasn't really much in terms of higher highs and higher lows. It was kind of primarily straight up with a couple consolidations along the way and no real technical price corrections to talk about. We haven't had a technical price correction until now since October, when the market was really entering correction, and that was actually a downtrending market. So this is the first real major price correction we've had in 2 months over the course of a market giving a huge up move. So seeing a pullback all the way to the 21 EMA on the daily chart should not be surprising at all. Just yesterday morning, we were talking about and this is assuming that the bulls can keep things intact, which, as far as I'm concerned, they still are. I don't see this thus far as anything more than just a technical pullback in what's been a very strong market, but we're starting to really hit the prove yourself point here. The bulls are going to need to take a stand relatively soon, or otherwise we might actually begin to see a change of character in this market. So today was a day 3 down. We closed kind of weak. We are just about touching the 21 EMA for the SPYs for the first time since the bottom in the end of October. You really want to see, if you're trying to be a bull, that tomorrow gives you your pivot. It'll be a day 4 potentially if we can trade below today's low tomorrow, which for the moment kind of looks likely because we closed so weak. But into that day 4, as you're really starting to overshoot the 21 EMA on the daily chart for these indices, that's going to be the spot where the day where bulls really need to take a stand, in my opinion. I like the idea for tomorrow of looking for maybe some sort of RDR, piercing through today's lows tomorrow and then a trade back up to potentially create that pivot point. Or if we actually were to get a larger gap down tomorrow, that'll be something that I'll almost certainly be looking to buy, a day 4 gap down in what has been a bull market into this equilibrium area. And then, I do think that we will see at least some sort of bounce at some point relatively soon. I think it has to happen tomorrow. The question off that, though, is a bounce to where? Will that just be a higher low that brings us right back to highs for the market? Or would that be a bounce that eventually creates a lower high for the market and then breaks the low that we create? And if the second situation happens, then again, you're looking at a major change in character. But I'd be very surprised if the rate of selling that we've seen over the last 3 trading sessions continues for, let's say, another 3 trading sessions. Or I'd be very surprised, I know Dimitri was joking around earlier, I'd be very surprised if after we saw 9 weeks straight up, we saw 9 weeks straight down. That tends to be not how markets work. So at a certain point here, the market's been so strong that bulls should come in and take a little bit of a stand. On a day 4, deep into the equilibrium zone, it makes sense that should happen tomorrow. And then the question is, what does that bounce look like when a potential pivot actually comes in? But for smaller time frame trading, I like the idea of looking for that RDR tomorrow, or buying that gap down tomorrow, or if you get the gap down, looking for the intraday signal to be able to get heavy, and then actually having some conviction to take some size to look for a more real balance than the market's been able to give over the course of the last few days. I think that the most tricky situation, and probably the one that we don't want to see happen just from a trading perspective, would be if we had like a nice solid gap up tomorrow. I think that'll make for tricky opening price action, because it's like, do I really want to chase the gap up? When we closed on lows yesterday, that'll be difficult unless you gap up, sell off in the beginning of the day, which we've certainly seen happen a lot. Early day sell-offs, even in the strong market, have been fairly commonplace. But in the worst case scenario, I think for short-term traders or traders who are trying to get heavier to the long side or reposition themselves, would be if we gap up tomorrow and then just continue to bounce, because it won't really give people an opportunity to get real size on the long side or have conviction on the long side. It'll kind of just go without people. So obviously we can assess all that in the morning. We'll see how we gap. We'll see how we trade in the beginning of the day and kind of take it from there. That's where the SPYs are. Let's take a quick look at the Qs and the IWM to see a little bit of a different picture of more weakness. Qs definitely weaker than the SPYs. Spent the entire day below the 21 EMA today. I think it's the same deal, though. We need a bounce to come into the Qs tomorrow. Some of these names actually held up better today. I'll talk about individual stocks in a second. There were some good trades, I think, in some of the Magnificent 7 names that were actually the weakest names that were out there yesterday. Actually, I think created some of the best trading opportunity today, even if they didn't give necessarily fantastic follow-through. But the Qs also ended up closing pretty weak. It's the same situation. We need a pivot to come in tomorrow, or otherwise, You're starting to potentially look at a character change. This 80 EMA is now pointing down. The 21 EMA is flattening out. At a certain point, if we stay down here, those moving averages are going to cross, and things will not look as good. And kind of same deal with the IWM. You know, the IWM, it's interesting, is down over 5% now from highs on a closing basis. I was doing some quick math, and it's like 5.2% on a closing basis from this high just a few days ago down to the low of where we are. Again, should be taken with some perspective here, because it's just been a huge move over the course of November, and then the real big catch up in December. Not surprising at all, like I was saying before, to see once we lose IWM 196 that you get a very quick sell-off into the gap fill area. But this will be another one, RDR tomorrow, or a gap down that, you know, finally finishes fully filling that gap. If you gap down to, you know, 193 and like 193.20 or something, you know, a little bit above 193, that'll be an area where I'll probably look to take a little bit of a stand on the market, because for the most part, I've been, you know, just kind of starting real small on a few positions and following my game plan of building in a little bit to the downside as the market does this price correction to equilibrium. But I've been hesitant to take any real size without a signal, just recognizing, hey, this market went, you know, really far, really fast, and a deeper price correction makes logical sense. So it's kind of where I've been at from a positioning perspective. Just largely been in wait and see mode and building into some things real small. As far as trading today goes, you know, when you are dealing with a technical price correction within the confines of an uptrend, obviously, as the market's moving down, you never fully know, you know, are we going to get the pivot low that just is the pivot low of this uptrend? And pivot low, if you know, capturing pivot lows within uptrends or capturing pivot highs within downtrends, I think are some of the best money-making trades that are out there. Because let's just say, hypothetically, that we get one of these better trading scenario setups that I'm talking about for tomorrow, and we're able to really nail a pivot low, and that pivot low actually is just the pivot low that leads to continuation of the uptrend. What does that mean? It means eventually that these indices are going to be making new highs across the board. That's what trend continuation literally means. So your upside is very unlimited, and your risk reward can become phenomenal if you're actually able to capture the pivot low within an uptrend or the pivot high within a downtrend. But the hard part is the actual execution of doing it. And that's where I always talk about, you know, what are our continuation setups that we can look for. You know, I like when you get the hammer low within the uptrend. I call it a continuation hammer, and you can be long versus that low. Or if you get the inside candle that breaks to the upside. And that's actually another situation that I didn't talk about, which could happen. Tomorrow, it might be a little bit annoying, but we could get a gap up tomorrow. And especially because I don't think there's any major economic news or anything like that coming out, we could get a gap up tomorrow and just go kind of sideways and have an inside day tomorrow. And that actually could set you up in either direction for the day after tomorrow. And inside and up, that can create the pivot point. That's actually one of my favorite pivot low within an uptrend setups. Or you could get the inside and down, which actually starts to signify a little bit more of uptrend failure potentially. So that's actually another situation that can happen. But we want to execute appropriately, because you don't know, you know, just going back to the SPYs, I mean, I could keep looking at the IWM. You don't know just looking at the SPYs, right? We know that in a market that's creating a pattern of higher highs and higher lows, that the higher lows usually happen somewhere very broadly within our equilibrium area. What is the equilibrium area? The way that I define technical equilibrium is the space between the 8 and 21 EMA on any chart that I'm looking at. So if you go back to the last day of December, we have a little bit of a tail into the 8 EMA. In a really strong market, that's it. That's your pivot. You tail into the 8 EMA. Maybe you don't even fully touch the 8 EMA, or you touch it a little bit, or you just barely pierce it like we did back here on the 29th. And then you pivot right back up, and you have that downside tail, and then you're making new highs, and that's your higher low, and that's your continuation. It's a very shallow price correction. Or you could correct a little bit deeper into equilibrium. Yesterday's low was, more or less the midpoint between the 8 and 21 EMA on the daily chart for the SPYs. That could be it. And we closed off lows because we had the great MOC rally, 7.8 billion into the close yesterday. And you get a low of 470.49 and it's in the equilibrium zone, and then that's your pivot point and that's it. You could go straight down to the 21 EMA in a deeper price correction and then create your pivot low, or you could even pierce through the 21 EMA, potentially what the Qs and IWM are doing right now, and then create a very deep pivot low that then is your higher low that leads to continuation. The point that I'm trying to get across here is that when you see the price correction actually occur, you can't know. Is this going to be one of those ones that barely touches the 8 EMA, or is this going to be the one that, shoots all the way past the 21 EMA, creates a deep price correction, and then creates a broader pivot point down in that zone? You don't know. So if you're buying, and this is the message I've been trying to get across for the last several days, if you're just, as soon as the market's touching the 8 EMA, going full BP to the long side, and you happen to get the correction where it is the most extreme within an uptrending market that maintains its uptrend, where you pierce the 21 EMA and then get the bounce, you are enduring probably more pain than you can take. So the difficult part is the execution of the pivot, right? And that's why we want to be able to look for signals intraday. We want to look for, again, I'm describing some that could potentially happen for tomorrow, where it's that RDR or it's the gap down kind of buy back up situation. But for the most part, you want to try to buy things on the way up, not on the way down. And that's the message I was trying to get across in the morning meeting today. I don't know this morning when the market's set to open up somewhere around yesterday's low, maybe a little bit below yesterday's low, if that's just going to be it or not, and the pivot's going to come in and we're going to go. I do know, though, that if the pivot's going to create itself, that means that the market's going to work its way up. So let the low come to you and buy it on the way up versus the low. And if we close well and we close at highs, bam, you got your potential pivot point, and you want to swing some of that stock. You probably want to swing a good percentage of your stock to get the bigger follow through on the daily chart. Or if the market is going to stay weak, then either you never get triggered into the position because it never went up to trigger you in because you wanted to be buying on the way up, or you did get triggered into the position, but you manage your risk and you either stop yourself out and reassess, or hopefully the bounce is big enough where you're able to get your risk covered before you get stopped out. That's really what I want to be looking for. So that's kind of the game plan that I'm creating each morning right now as we're coming into the trading session. I don't know this morning when I'm doing the morning meeting, hey, is this going to be it? Are we getting the pivot low this morning and we're going to move higher? Or do I need another day of selling to get us closer to the 21 EMA to set up the day 4 to the downside for the bounce? I don't know. But the point is, I really like the risk reward of buying things potentially on the way up. Obviously, you got to see exactly what your entry price is and what your stop loss is going to be, where the low actually is, to take advantage of that. So that's kind of where most of my game plan came in this morning when I was making my list. Just an example of, there's a few examples, but one that I traded was NVIDIA. NVIDIA off the open, I'm looking at 475 versus whatever the opening low is. So I'm saying, all right, 475, I was watching it. It was important pre-market. You also could have used yesterday's low. That would have made sense to me, which is a little bit closer to 476. But I was going after 475, wrote it on the list, long back through 475 versus lows. I know it was a little bit tricky of an execution because it right off the open, I think it ticked to 470.40 before actually creating its low, and then it broke back through that 475 and then worked. The execution can sometimes be a little bit tricky, but if you were able to nail that after the low came in back through 475, it's an expensive stock. So you are taking $1.80 worth of risk. It's an expensive stock. It might not be right. It's probably not right for every trader here to trade this. So ignore the expense of the stock for a second and focus on the idea. The idea of, hey, I'm buying this through 475. I got my risk. It gave this great bounce here. At one point in the video looked fantastic. That's not really the point, though. The point's not how it looked. It's the potential of the result. Because if I can now get what I'm talking about where, hey, look, I'm buying this on the way up. Maybe this is the creation of that pivot low. If this becomes the pivot low on the daily chart and that daily chart actually does give trend continuation, which we know is what tends to occur because the trend is your friend and trends tend to last for longer than people expect that they will, well, the next thing you know, you're looking at this buy making new highs, basically getting above 478, and then it's not impossible to have bought stock at 475 today with that $1.80 worth of risk and still have it as if the market's making a pivot low this morning and Nvidia is trading through 475 and that pivot low leads to new highs for the SPYs and the Qs, I can just about promise that unless there's a bad news event, that Nvidia will be also trading through $500 as that pivot low actually comes in. Next thing you know, you bought stock for $1.80 worth of risk today. You are getting your risk covered into the up move because you always want to get your risk covered into the up move. You never know. Maybe you're taking even a little bit more off the table to ensure that you have a winner on your hands. And then, unfortunately, today the market failed for us. But this Nvidia looked so good this morning. If it could have gotten some market help, next thing you know, you could easily have Nvidia closing in the mid 480s. You're $10 in the money on your initial $1.80 worth of risk. You swing 25 to 40% of your initial position, and that 25 to 40% of your initial position, next thing you know, you have this thing at $510 or $525. That's how trends work. Trends also fail. We need to be aware of that. But I think that coming in and assuming that any trend that you're going to look at is going to fail, you should always be looking at every piece of evidence, right? I felt I was looking at a piece of evidence at the very end of October that meant that the downtrend in the market was going to fail, and the evidence that I was looking for ended up, giving me a thought process that worked for me. But for the most part, it's pretty dangerous to just assume that in any pullback in an uptrend or any bounce in a downtrend, that this is the end of the trend. Once in a while it will be. Most of the time it won't be. So your best risk reward setup is like, okay, wow, I got a day 3 down, I got a day 4 down. Let me look at how I can buy on the way up. Still need to manage my risk just in case these trades fail, and many of them actually did, but you're putting yourself in a phenomenal risk reward setup. And that's, Nvidia that I'm using as an example. There were other trades that were similar but different. We talked about Google gave this really nice tail yesterday, was showing relative strength. The Qs were showing relative strength this morning compared to the IWM, compared to the SPYs. So we talked about in the morning meeting, hey, some of these names that are actually above yesterday's low, you could look to be long versus yesterday's low. You could look to be long versus a pre-market low. It's a similar idea. Nvidia is slightly different because it's trading below yesterday's low, but technically, if you look at Google, you are still buying this thing on the way up because it's still above the pivot low from yesterday. There was buying that came into this thing yesterday afternoon. You're getting a pullback in the afternoon worth of buying via a gap down this morning that actually creates the setup entry versus the pivot low. And that's actually been a trade that has worked really well with a lot of stocks over the course of the last couple of months. Maybe not the market itself, because the market, like I said, was straight up, but there were a lot of stocks out there that weren't that way. I remember specifically, because I still got this Google chart up, telling people that we could go long for a lot of these names. I think it was versus this December 14th low, which was the same situation. And Google might not have been the best one. Oh, this was another one really good. Same setup back here, December 4th. Google price corrects. I think that some of big cap tech price corrected. You get that tail. You get the gap down the next day. That gave a great setup to get long stock versus that previous day's low. So Google here, once again, gave the exact same situation. Maybe yesterday is that pivot low, and now the gap down is actually a gift to be able to get stock at a better risk reward than if you were gapping up or having a flat open versus yesterday's low, to see if you get continuation in Google, to see if you get continuation in the market as a whole. So that's the trade that I'm really looking for. And whether you were trying to do it, and there are others that failed. Apple as an example is one that failed. There are probably plenty that failed because the market itself didn't actually give the pivot. The market itself failed for us. But you could have looked at Apple. We talked about this one in the morning meeting also versus yesterday's low with the extension on the daily chart. That gave a great opening bounce. Hopefully that bounce is enough to cover your risk before the trade breaks that low and eventually fails. That's the point. I don't care that Apple failed. I don't care. Amazon was another one that failed. I don't care that Amazon, which was the same setup, eventually fails. Google, off of its relative strength, actually worked great and didn't fail at all. NVIDIA, I don't know if I like I was saying in the VTF, I almost kind of wanted this thing to fail so that I would just get stopped out of it already. But NVIDIA never actually broke that opening low all day that was able to hold. Not nearly as good of a close as Google, but held in really well. So again, the point is that's where some of the best risk reward setups actually come in my opinion, in the entirety of trading and the entirety of the marketplace. It's trend continuation trades where you are taking advantage of a market that has corrected through time or through price. Everything that I'm talking about in this afternoon meeting is specifically about price corrections because that's what we're currently dealing with. But there are other examples of time corrections like what we dealt with in the back half of November and the very beginning of December with the SPYs and the Qs, where they went sideways for I remember the Qs in particular, I feel like went sideways for 15 days before they actually broke out of that consolidation pattern. That was more of a time correction than a price correction. Maybe we got a little bit of a price correction, but it was really more of a time correction. Those are my favorite setups in the market. And if they fail, then go ahead and fail. I am not good enough of a trader, and I don't know anyone that really is, for the most part, who can consistently say, all right, well, this is the time where the pullback on the market's not a pullback, it's actually a failure. And if you can do that every time, you're a much, much better trader than I am. The best thing to assume until you actually have a reversal pattern is that the market's not going to reverse. That's the best thing to assume. Reversal patterns are what changes things. And I described the potential of how a reversal could occur in this market. At some point, we're going to get a bounce. I think that we should be able to get a bounce starting tomorrow. Maybe I'm wrong, but at some point we will get a bounce, I promise. And when we get that bounce, does a lower high come into the market? And then that lower high leads to a lower low. Well, guess what? You just went from a pattern of higher highs and higher lows to a pattern of lower highs and lower lows. The uptrend has now proven that it's failed. Or you can create a double top pattern. That's a reversal pattern. You could create a rounded top pattern. That's a reversal pattern. You could create a head and shoulders top pattern. That's a reversal pattern. But let the reversal pattern actually come in and prove it to you before you're just saying, hey, you know what? The uptrend or the downtrend that I'm looking at is 100% over. And in fact, I think that that's really bad thinking, because most of the time the trend continues, and a lot of the time in the trend continuation, when you've got time correction or price correction, that is the best opportunities that the market provides, period. Because while, every once in a while, you might be able to pick an absolute top or bottom like I was able to do at the end of October, and it can be extremely profitable for you if you do that. That's very hard to be able to do. I would say potentially impossible to be able to do with any real consistency. So that's where we're at. That's what I'm looking for from tomorrow. That's kind of how I'm positioning myself, and that's all I got. So I am happy to take a look at whatever you guys have or answer any questions that you have. Looks like MDB got downgraded after hours. Getting hit pretty hard. I couldn't believe, speaking of after hours downgrades, I couldn't believe how bad they hit this SoFi on that stupid downgrade, reducing the price target from 750 to 650. Congratulations to that analyst, but that was a brutal sell-off in SoFi. Well, 14% off a downgrade. I know a lot of these names were weak in general, so it probably would have been down a decent chunk no matter what, but that was pretty vicious. From Dave S., what time frame would you recommend to use to look for candlestick pattern entries for this pivot point trade you're discussing? Yeah, so great question from Dave. So I'm always trying to be able to combine multiple time frames, and my favorite way to trade is looking at small time frames for execution off of big picture thought processes and big picture ideas. So the big picture thought process, the big picture idea is, hey, we just had this, big price correction, 5+% now in the IWM, into the 21 EMA or even beyond the 21 EMA for all three of these indices. Tomorrow is potentially a day 4 down. So the big picture is telling me that we are near the time where that pivot should be able to come in. The small picture tells me how to actually execute it. And what do I mean by the small picture on how to actually execute it? Usually a 5 or a 15-minute chart, depending on the time of day. If it's the beginning of the day, it's going to be a 5-minute chart, similar to what I was describing with, NVIDIA, Google, Amazon today. That was just off the 5-minute low or off the pre-market low, trading off the 5-minute chart early on in the day to see if you can actually get that continuation. So, good question, Dave. Thanks for the question. Over in the YouTube, what's up, Robert? What's up, Bright? What's up, Gabriel? Bright asking about CAR. What do I think of CAR from a swing long at this point for a range-bound oversold bounce? It's super weak. It's definitely oversold. I don't like when things close at lows. The 165 print's not real. I'm seeing my daily chart showing 165 right now. It actually closed at like 167, so there's like an out-of-market print that's $2 below that. So this red candle is probably decently brutal, but not as brutal as it's currently shown. It ends at like 167 here. That's where the thing closed at lows. So buying into the close when something closes on lows is usually not a great idea. I can see the rain-bound nature of the stock that you're looking at, but again, the thing closed on at lows, and your support zone starts really closer to 160 than 167. So I like the idea of looking for an oversold bounce in a range-bound stock as it approaches support, especially if it gets extended into support, especially if it coincides with the market that potentially is going to be on your side. So I like all of that as a thought process. It's not something, similar to what I was just describing before, it's not something that I would like to buy today when it closes at lows. I want to buy when the setup itself actually occurs, where I'm buying it on the way up. So that could be an RDR in this thing tomorrow. It could be a gap down tomorrow and a bounce off of the opening low or the pre-market low that I'm looking to take advantage of to actually come in on that long. But broadly, I would say I like the thought process. I just think that you need to have your execution in order. Thanks for the question, Bright. From Gabriel, do you like Meta for an inside and up if the market collaborates? Yeah, I do. This is another one that actually showed really good strength. Not as strong as Google today, but considering that the market broke significantly yesterday's low, if you can find things that have a tail 2 days ago and then an inside day today, if the market can then be on your side, exactly what you're saying, I like the idea of going after relative strength and see how the market gaps up or down tomorrow, but there's a few ways that you could potentially trade that. One is just the actual inside and up, if it's breaking through yesterday's highs. One is if the market were to gap down tomorrow and we're looking for that, buy off the gap down situation like we're talking about, you might be able to buy Meta back through yesterday's low. It gaps below the inside day low, but it's not able to hold below the inside day low, so you're buying it back through that low. Those would be probably the two ways I would prefer to look for it. If it opens within the same range again tomorrow, you could cheat a little bit versus the inside day low. That's a trickier execution, I think. Thanks, Gabriel. What's up, Mike? Happy New Year. Glad you're following along in the YouTube. Make sure to give it a thumbs up. Okay, cool. It looks like I got through everyone's questions in the VTF and in the YouTube. Guys, don't ever hesitate to ask questions. That's how we all improve as a team. But I will wrap things up for today. If you're in YouTube, give me that thumbs up button. And otherwise, have a fantastic night. I'll see you all tomorrow morning.